This is part 2 of the final accounting review for IME for the fall. In part 1, we looked at the income statement as taken from the trial balance and the statement of retained earnings, and we ended up with a final balance in retained earnings of $8,500. Now we take that amount and we put it right on the balance sheet. Like everything else, all the other financials, we start with the title, the name of the company. We say what the statement is, it's a balance sheet. But all the other statements say for the year ended. This one just says the date. Now, the purpose of the balance sheet is to show the accounting equation. This can be done kind of easily because it's assets equals liabilities plus owner's equity. I could stack them up and have assets over liabilities and over owner's equity, or I can put the assets on the left and liabilities and owner's equity on the right. Either way is correct. But what I have to do is break up anything that's in a current portion or a non-current portion, except when there's only one item in that category. And I'll show you what I mean. On the asset side, we have current assets. These current assets are cash, and that amount is $2,000. Accounts receivable, which is $5,000, and inventory, which is $3,000. Those items total $10,000. Under there, we go ahead and we put on the non-current assets. In this case, we have equipment, and that equipment balance is $10,000. And we have accumulated depreciation, the wear and tear of this equipment of $4,000. Well, up above, we added them. In this case, we can go ahead and subtract them, and we get $6,000. That shows my total assets of $16,000. I still need to go back and make sure I've got all the formalities there. Put a dollar sign at the top of each column, dollar sign where I show the total assets, that's the purpose of the balance, and double underline. Give me a minute or a second, and I will move things over to the left in a little neater way, and we'll come back and talk about the right side of the equation. On the right side of the balance sheet, or underneath the assets, is where you put the liabilities. In this case, we only have one current liability and one non-current liability, so we don't need to separate them out. But please note that if we had more than one, we would have to do that. So on the liabilities and the owner's equity side, I can go ahead and I can put in accounts payable of $1,500, and I can put in notes payable of $5,000. That gives me total liabilities of $6,500. As far as the owner's equity side, I've got the common stock, which is the owner's equity side, or the ownership side rather, of $1,000. And I have the retained earnings. But remember, I'm going to go ahead and take the $8,500 that I have from the statement of retained earnings and not the $7,500 on the trial balance. That totals $9,500. So when I total my liabilities and my owner's equity, I end up with $16,000. Total liabilities and owner's equity. That's the other side of my balance. So the purpose of my balance sheet is to show the balance, and I'm going to double underline that amount. Again, I'm going to come back and I'm going to put dollar signs at the top of each column. Didn't mean to put that there. Meant to put it down here with the total liabilities and owner's equity. So again, I've double underlined the purpose of this statement. There was a second part to this problem, and it should be on the second page that was sent to you. That's a different question. It asks you if the sales price per unit is $20 per unit and the cost of goods sold is $5 per unit, how many units must be sold to break even? Well, if you're asking yourself where are the fixed costs, that's because you've got to take the information you've learned in this course and determine which costs are fixed costs anyway. You need to stop and think about what you do know. Cost of goods sold is going to be your variable cost, so therefore sales minus cost of goods sold is going to equal your contribution margin. And again, remember that's per unit. You also know that up above in the trial balance, the cost of goods sold is a variable cost, and we already took that out. Salaries expense has got to be a fixed cost. Someone who's paid on salary doesn't really get paid by hours worked. They get paid by the year. So that's certainly a fixed cost. Utilities expense also doesn't change by the number of units produced. And that's kind of the definition of what is a variable cost. A variable cost changes with production. Those that don't are fixed costs. So I know that my salary expense and my utility expense, that $4,500 has got to be my fixed cost. I also know that my fixed cost divided by my contribution margin per unit is equal to my break even. So if I take my $4,500 and I divide that by a $15 contribution margin per unit, I find that break even is 300 units. Now I have to go back and apply that. Can I sell 300 units? If so, I can break even. That completes the final accounting review for IME. If you have any questions about this information, send me an email or stop by my office and I'll be happy to help you out.